Welcome to the Cash Chapter, your go-to space for building smart wealth, even if you're just getting started. If you've ever felt overwhelmed, confused, or honestly scared about investing, you're not alone. By the time you finish watching this video, you'll have a clear step-by-step guide on how to invest as a beginner in 2025. You don't need thousands of dollars or a finance degree, just a willingness to take action. If you've ever searched, "How do I invest as a beginner?" or "What's the best way to grow $100?" this video is for you. Hit that like button to help more people like you find this video, and let's get started on your journey to financial freedom today. Here's a question for you. If you had invested $1,000 in the S&P 500 20 years ago, do you know how much it would be worth today? Over $6,000. And that's without doing anything fancy. That's the power of compounding and long-term investing. Now imagine consistently investing every month for the next 20 or 30 years. This video will help you understand exactly how to do that in simple, actionable steps. Let's go. Let's start with the why. Why should you even bother investing? Especially if you're living paycheck to paycheck or just trying to keep your head above water. Because time is your greatest asset. According to a 2024 Charles Schwab study, someone who starts investing at age 25 ends up with nearly 3 times more money than someone who starts at 35, even if they both contribute the same amount monthly. That's the power of compound growth. If you were to invest just $100 a month into an S&P 500 index fund that historically returns around 8% annually, you'd end up with over $150,000 in 30 years. That's just $3 a day. You don't need to be rich. You just need to be consistent. And if you only have $50 to start, that's enough. The key is to begin. If you're ready to take that first step, drop a "let's go" in the comments and make that commitment real. Now let's talk about the 5 basic steps you can follow to start investing today. Step 1. Build your emergency fund. Before you start investing, you should have at least 3 to 6 months of living expenses saved up. This gives you a cushion so you won't have to sell your investments in case of an emergency. Step 2. Pay off high-interest debt. If you're paying 20% interest on credit card balances, it doesn't make sense to chase an 8% return in the market. Kill your debt first. It's the best guaranteed return you'll ever get. Step 3. Choose a brokerage. Platforms like Vanguard, Fidelity, Schwab, or even mobile-first apps like Robinhood and M1 Finance offer zero commission trading and are perfect for beginners. Step 4. Open a tax-advantaged account. In the US, that could be a Roth IRA or a 401k, especially if your employer offers matching contributions. Outside the US, research your country's tax-advantaged investment options. Step 5. Make your first investment. If you want something low-risk and beginner-friendly, go with a broad market index fund or ETF like VOO or VTI. These give you instant diversification and track the overall performance of hundreds of companies. So, what should you actually invest in? The simplest and smartest option for most beginners is an index fund or ETF. These are funds that track the entire market or large sectors of it. For example, VTI gives you exposure to the entire US stock market, and VOO tracks the S&P 500. Both have low fees and proven long-term performance. You're basically investing in companies like Apple, Microsoft, Amazon, and hundreds more. If you want to reduce volatility, consider adding some bonds to your portfolio, maybe through a bond ETF like BND. Bonds aren't flashy, but they provide stability, especially during market downturns. Want exposure to real estate? Check out REITs, real estate investment trusts. These allow you to invest in commercial and residential property markets without being a landlord. And if you're saving for a short-term goal, high-yield savings accounts and CDs are great options right now, with interest rates in 2025 hovering around 4 to 5%. Finally, let's talk crypto. It's volatile and risky, so if you're curious, keep it to less than 5% of your total investments and stick to major coins like Bitcoin and Ethereum. Now let's save you from some very common beginner mistakes. Mistake number 1. Listening to TikTok or YouTube finance bros who promise 10x returns in 10 days. That's not investing, that's gambling. Mistake number 2. Panic selling when the market dips. In March 2020, the S&P 500 dropped by 30%. Many investors sold in fear, but those who held on saw their portfolios recover and grow even more by 2021. The lesson: the market rewards patience, not panic. Mistake number 3, overcomplicating your portfolio. You don't need 30 stocks and 5 different apps. You don't need to check your investments every day. One simple ETF, consistently invested in over time, can outperform 90% of active traders. Keep it simple. Automate your contributions. Let time do the work. Now let's talk mindset, because this is what separates successful investors from everyone else. The truth is, successful investors aren't necessarily smarter. They're more consistent. You don't need to predict the market. Use dollar cost averaging. Invest the same amount on a regular schedule, whether the market is up or down. Set up automatic contributions so you don't have to think about it. Turn off the financial news and stop checking your portfolio every hour. As Warren Buffett said, someone is sitting in the shade today because someone planted a tree a long time ago. You're here to plant those trees today. Your future self will thank you. Let's quickly recap everything. Start by building your emergency fund and paying off high-interest debt. Choose a solid brokerage, open a tax-advantaged account, and invest in broad market index funds like VOO or VTI. Keep it simple, automate, and stay patient. Investing isn't about making quick money, it's about building long-term wealth. If you found value in this video, hit that like button and share it with someone who needs to hear this today. Subscribe to the Cash Chapter for weekly videos that break down money, investing, and financial independence in a way that's easy to understand and apply. And if there's a specific topic you want us to dive deeper into, leave a comment below. Remember, your financial future isn't shaped by your past. It's shaped by the decisions you make today. And today, you chose to learn. That's powerful. Keep going. You've got this.